the secret monetary revolution that will change your money forever. Imagine waking up one day to find that the US dollar, the currency you have trusted and saved for years, suddenly loses its value or is replaced by a new kind of money you don't fully understand. This story is not fiction. It is unfolding step by step right now. We all know that the US has long depended on borrowing, issuing bonds to raise funds for spending. Bonds are essentially promises. Buyers lend money to the US, and the US pays interest in return. But few notice this. As debt piles up, the US must raise interest rates to attract bond buyers. Higher interest rates mean more expensive borrowing costs, making the debt snowball bigger and bigger. Eventually, no one wants to buy US bonds anymore. That's when the dollar starts to lose trust. And here's the key point. This is when American capitalists, the people behind the curtain of power, begin to outline a new plan. They don't want the dollar to die quietly. Instead, they aim to create a new monetary king, not by force, but through technology and law. Think back over a century ago, when gold was king and people only trusted gold. Then the US cleverly linked the dollar to gold, convincing people that the dollar was paper gold. Once trusted enough, the US severed the link, making the dollar the new king, and the world had to follow. Now they're doing the same with stablecoins, a type of cryptocurrency pegged to the US dollar, offering stability, easy transactions, and security against theft or loss. People begin to trust stablecoins because they are backed by the dollar. Gradually, as familiarity grows, stablecoins will separate from the dollar and take the throne. You might ask, what about Bitcoin? Bitcoin is not official money. It's like digital gold, a decentralized asset not controlled by any government or bank. Its price fluctuates wildly, making it unsuitable for everyday use. But Bitcoin started an intellectual revolution, opening the world's eyes to digital currency and forcing the US to accept cryptocurrencies like stablecoins, regulate them, and thus maintain control. Stablecoins act as a bridge, providing the daily transactional stability needed, while Bitcoin serves as a long-term store of value, like digital gold. This smart strategy shows that American capitalists don't simply lose power when the dollar devalues. They transfer that power into a new form, digital money, with stablecoins as the bridge. Thus, the monetary revolution is not destruction, but a transformation of power to keep them in control. And you listening to this story are a key figure in the greatest transformation of the century. Understanding the nature and mechanics will help you avoid risks and seize financial opportunities opening right before you. Before diving into details, remember that the US faces a paradox. It fears Bitcoin might replace the dollar as the global currency. Therefore, the US defines Bitcoin not as money, but as an investment asset like stocks. This seems contradictory because Bitcoin could replace the dollar for payments, but its extreme volatility prevents daily use. For example, if you buy 10 Bitcoins at $10,000 each, total $100,000, to buy a house and Bitcoin's price suddenly drops to $1,000 each, your total value is only $10,000. This is like using volatile stocks as collateral for a loan, inconvenient and risky. So, the US skillfully created a divide between Bitcoin and the dollar. Bitcoin is only investment, not currency. Many believe Bitcoin cannot replace the dollar. Yet, because Bitcoin is decentralized and beyond full US control, the government reluctantly allows it as an investment tool, which also enables money laundering for some. Next, the US moves to step 2 of its strategy, introducing the new king, stablecoins. Previously, the ultra-wealthy stored money in Swiss banks for security and neutrality. But after the financial crisis, the U.S. pressured Swiss banks to disclose accounts, damaging trust. Large funds shifted to Bitcoin, pushing its price sky high. Yet volatility worried the wealthy, and stablecoins emerged. Stablecoins lock the value of money, keeping it stable during transactions. For example, if you receive $100,000 in Bitcoin, you can immediately convert it to 100,000 stablecoins to avoid losses. Stablecoins can be redeemed back to dollars or Bitcoin anytime. Today, over half of Bitcoin trades use stablecoins to reduce risk. Stablecoins also disrupt the traditional, slow, costly money transfer system. Instead of many intermediaries and days of delay, international transfers via Bitcoin or stablecoins are almost instant, with minimal fees. This is a huge step, making cryptocurrencies more like dollars and widely accepted. Step 3 in the U.S. plan is to legalize Bitcoin and stablecoins. Previously, Bitcoin trading was risky, done through private exchanges. Last year, the U.S. legalized Bitcoin ETFs, allowing Bitcoin to be traded like U.S. stocks through brokers and banks. Recently, U.S. regulators required stablecoin issuers to hold cash or U.S. government bonds equal to the stablecoins issued, ensuring stablecoins can be redeemed for dollars anytime, reassuring investors. Thus, stablecoins are tightly linked to U.S. dollars and government bonds. To understand this better, look at history. The dollar was once backed by gold. But excessive printing during the Korean and Vietnam Wars created more dollars than gold reserves. The French president protested, exchanging thousands of tons of dollars for gold, warning the U.S. could not cover all dollars worldwide. In 1970, the U.S. officially abandoned the gold standard, turning the dollar from gold-backed paper to true currency. Today, U.S. government bonds, called treasuries, act like those old IOUs, while the dollar is like gold once was, the true currency. But what if the world demands repayment of $36 trillion in U.S. bonds? How could the U.S. pay? This is why the U.S. is turning bonds into stablecoins, a new currency linked to bonds, monetizing public debt. Basically, when you exchange dollars for stablecoins, the issuer uses that money to buy U.S. government bonds. You use stablecoins for transactions. The issuer holds bonds and earns interest. The U.S. government gets cash from bond sales. So stablecoins are both currency and a fundraising tool, letting the U.S. spend without borrowing more. This creates a closed loop, swapping old debt for new without real repayment, making public debt invisible and stable. You might wonder if stablecoins are big enough to replace the dollar, since their market value is only a few $100 billion while U.S. bonds total $36 trillion. But if stablecoins are used not only for Bitcoin but also for U.S. stocks, market cap $60 trillion, the stablecoin market could grow enough to cover that bond volume. This explains why more U.S. crypto exchanges now allow customers to buy stocks like Apple, Tesla, or Nvidia using stablecoins. As stablecoins become common for stock trading, they will become a new pillar of the global financial system, replacing the traditional dollar. Even figures who once opposed Bitcoin, like Donald Trump, have changed. His family issued their own cryptocurrency and made huge profits in a short time. This proves how deeply the wealthy and powerful families' views on cryptocurrencies have shifted. Do you think Bitcoin could be the stepping stone for a new form of money? Just like how the world once moved from gold to the US dollar, could Bitcoin be paving the way for the next big shift in how the financial elite control the system? From my perspective, alongside gold, Bitcoin continues to be one of the most promising assets in an investment strategy. Looking at the charts, Bitcoin has gone through a major correction but now shows signs of steady recovery. When its price breaks through important resistance levels with strong trading volume, that's often a signal worth paying attention to. maybe even the right moment to buy or increase your holdings. But investing is never simple. No one holds a crystal ball or insider knowledge. The smartest way is to follow where the big money flows, watch the trends set by leading investors, and rely on chart patterns and technical analysis. If any parts of today's video feel complicated, don't worry. Going back over previous episodes can really help, as everything builds on each other logically. I'll keep sharing free, clear insights about wealth creation, startups, investing, and the path to financial freedom. So, join us here at Richness Journey. Subscribe, hit the notification bell, and share this video to stay ahead with practical financial knowledge. I wish you success on your journey to financial freedom. And if just 1 or 2 ideas from this video help improve your life, that will be my greatest reward.